por el F5. Muy bien, buenas tardes a todos. Soy Augusto Caro, presidente del Comité de Sostenibilidad de CFA Spain. Como bien sabéis, CFA Institute ha mostrado un compromiso creciente con la sostenibilidad, reflejado en la cada vez mayor inclusión de temas relacionados con los factores ESG en su currículum y en la oferta de cursos formativos específicos. Fruto de ellos también es la creación del Comité de Sostenibilidad de CFA Spain, que nació en el 2019 y que tiene como principales objetivos, pues en primer lugar, el promover y afianzar en España la certificación recientemente redenominada CFA Sustainability Investing Certificate, antes CFA ESG Investing Certificate. Dar a conocer también otras certificaciones y cursos que CFA Institute está promoviendo, como por ejemplo certificaciones ligadas a la sostenibilidad como el CFA Climate Risk Valuation and Investing Certificate. También tiene como objetivo ampliar la difusión de publicaciones y recursos de investigación de CFA, participación regular en la difusión de artículos de opinión y también promover pues, una conferencia anual, que este año volveremos a repetir como tercer año previsiblemente en octubre, y realizar pues, seminarios web como el que tenemos al día de hoy. Es para mí, la verdad, un verdadero placer contar hoy con uno de nuestros patrocinadores, BNP Paribas, principal gestora francesa, y en especial con Arnaud Guillem en este webinar titulado Green Bonds, The New Contender. En este webinar ampliaremos nuestro conocimiento sobre este asset class, que como veremos cada vez tiene más relevancia y presencia en las carteras de renta fija y soluciones de inversión balanceadas. Arnaud Guillem es responsable de la estrategia de gestión de renta fija de fondos euro y experto en inversión socialmente responsable para la gestión de deuda. Antes de unirse a BNP Paribas Asset Management en 2010, fue gestor de eurobonos en Fortis Investment en Londres, 2007 a 2010, responsable de ABS y cédulas. Previamente fue además analista de crédito en Société Générale Asset Management del 2005 a 2007 y comenzó su carrera en Crédit Foncier de Francia en 2001. Arnaud Guillem se licenció en Finanzas y Economía por la École Nationale de Statistics et l'Administration Économique y tiene una maestría en matemáticas. Es profesor de técnicas de tutelización y estrategias de financiación bancaria. Por lo tanto, como podéis ver, un enorme y un gran currículum. Arnaud, thanks a lot. Thanks for having you here in this webinar. It's really a pleasure to count with you with this very interesting topic, the green bonds. So the floor is yours. Please, you may start whenever you want. Thank you. And thanks to BNP Paribas as well.
Yeah, thank you, Augusto. It's a pleasure to talk to you today about green bonds. Don't hesitate to ask questions as soon as you have any. I'm happy to have a live debate. I will go through the slides, but really, if you have any questions, don't hesitate to ask. So the first point will be a very quick intro on green bonds. I guess most of you know already about green bonds, but I would just give a bit of a reminder here. So within the sustainable bond world, you have two main categories. The category of the bonds which are tied to key performance indicators, and the category of the bonds which are tied to use of proceeds. So the ones which are tied to key performance indicators, you have sustainability linked, you have impact bonds, whether they are social impact bonds or environmental impact bonds. You fund more or less for sustainability linked the whole company, but the coupon will be linked to the success or not to some key performance indicators like carbon footprint, etc. On the other side, you also have the sustainable bonds, which are tied to use of proceeds, where you will directly fund some projects through the issuer. And so the money that you lend to this issuer will be then used to specific projects that will be detailed to you, whether they are green projects, green bonds, social projects, social bonds, or social and green within the same bond, sustainable bonds. So today, we'll look at the green bonds, so bonds that will be issued in order to fund some specific green projects. So what's important from my point of view, is that the green bonds.
Yo no soy técnico, pero
yo, joder, cada vez que viene Alejandro de la reunión de obra, siempre le pregunto, oye, ¿qué tal? ¿Cómo van los avances y tal?
Please,
Y para
if
sacarle cuatro
someone can mute,
frases, me cuesta.
thank you.
no sé, yo. Y se corren el riesgo de inventar, de hacer las cosas muy administrativas, pero.
A ver, yo no haría el informe que has hecho tú, que me parece muy bien porque me dices, mira, yo.
Sorry about that.
Oh, sorry.
Well, it happens. It happens. So yeah. So I was about to say that green bonds is really a growing investment universe with an expanding universe in terms of sectors diversification. And if you can go to the next slide, and it's now also a liquid universe that trade like the classic fixed income. And one point which is very important for green bond is that you bear the risk of the issuer. You don't bear the risk of the project itself, you bear the risk of the issuer, which means that you have a lot of fixed income investors who buys some green bonds without knowing they are green or without caring they are green, because a green bond is first and foremost a bond, and you will bear the exact same risk from a credit risk point of view than the one of the issuer. That's something that is very important for the investors you are and we are, to be sure that we get really the same type of bonds when we get a green bonds, and that the green is a bonus. You will fund something good for the planet while you will have exactly the same type of credit risk as a standard bond. And we will see as well whether or not we get the same type of return, and we'll see, well, the spoiler alert, we get the same type of return as standard bonds. What do we fund with green bonds? Well, we do fund renewable energy. So it's something that you all know is very important to fight climate change, and so to be on the renewable energy versus the fossil energy. You fund as well some clean transportation, especially, for instance, you can fund the electric trains or public transportation as a whole. You fund as well with the green bonds the high energy efficient buildings, so clean buildings as well, in order to reduce the carbon footprint of the use of the primary residence or offices or even potentially hospitals, etc. You can also fund, thanks to the green bonds, the pollution control or the waste or the living natural resources, and also the climate change adaptation. These three themes are smaller in terms of use of proceeds from the green bonds, but they are growing in what we can see in the market. And why are green bonds important? Because in fact, if you listen to the OECD, you need 7 trillion of funding per year, which is required to fund the energy transition. And that's around more than a 100 trillion market for the fixed income. You need this 7 trillion a year of funding. And the green bond is really the link between all the savings that are invested into fixed income, so more than 100 trillion, and these needs for energy transition, which are around 7 trillion a year. So the green bond is really there to drive the savings into the green bond project and going back to the investors in forms of a return. So some of the question we have on impact, and I will not go through a lot in terms of impact, but if we go to the next slide, we hear a lot, what about additivity? Is there a good signal? Wouldn't they have done that whatsoever? Should we really care between green bonds and standard bonds? It's interesting to see that study of the BIS, the Bank of International Settlement, and I like especially the slide on the right-hand side. The slide on the right-hand side does not give you the impact of the green bonds per se, but they show you the impact of issuing a green bond. What you have here are the aggregate emissions of an issuer, in average, before they issue their first green bond and after. So that's what you have in dark black, and in blue, you have the intensity of the emissions, which is even more interesting from my point of view. What's really interesting is that in addition to have a green bond being, funding good projects that will have an impact on the planet, it's interesting to see as well that it is a signal sent by the issuer that they will behave properly from an ESG perspective and from an environmental perspective. What you can see here is that before the first issuance of a green bonds, in average, the intensity of emissions was between 90 to 100 if you take the base 100 the first day of the issuance of the green bond. After that, you see that it drops to 75. So in fact, you have a reduction of 25% of the intensity of the emissions from the green bond issuers. So overall, not only on their through their green bonds, but overall all they do from the first day they issue to the fourth year afterwards. So that's interesting because not only you will invest into green bonds, which will have a positive impact, positive outcome for the planet, but in addition, you're also investing in issuers, which shows that you are committed to have a positive trajectory in terms of intensity of emissions and aggregate emissions as a whole. So I think you can find the details and the sources of this study from the BIS. It's not something we've done on our side. The BIS doing it. But so I think it's very interesting to have a look at this study, especially when we talk about additivity. Maybe now if you go to the next slide and we'll talk about the universe of green bonds. Whether or not it's big enough, how does it compare to the standard universe that you are used to invest into? So first, in terms of volumes, we are around 500 billion per year of primary issuances. So it's not growing anymore because it's already very high. And so at 500 billion a year, the overall market is beyond 2.5 trillion. So we have a huge market. It's not a niche market. It's not a tiny market at all. It's a very big market. It's a green bond market per se. And it keeps having new issuers coming in. And we see every time a new issuances. So 500 billion is a big part of the market on primary issuances. And it shows that it's a steady level. And this year should be close to the previous years in terms of emissions. So definitely something very different from what we had back in 2016, 17, and even 2019 or 2020, where we're below the 100 billion before 2019 and below 200 billion per year in 2020. Now it's 500 billion a year, more or less, on the green bond universe. So very big market. If we go to the next slide to see how it compares to the standardized benchmark. What we have put here is the green bond index, the global green bond index from Bloomberg versus the global ag index from Bloomberg and the Euro aggregate index from Bloomberg. So of course, you have some differences in terms of number of issuers, but as you can see, we are at more than 500 issuers for the green bonds, which is more or less half what you have in a Bloomberg Euro aggregate. So that's not tiny at all. It's half the number of issuers that you can have in your Euro ag. Versus global ag, it's smaller, but still pretty decent in terms of size. In terms of modified duration, and we'll talk again later about that, it's very similar now. It has not been the case through time. In the past, it was a bit different, a bit higher, and that's why it was a bit painful in 2022. But right now, you have a modified duration, as you can see here, which is very close between the green bond, the global ag, and quite close as well to the Euro ag. And if you look at the yield to maturity, we're in the same level from a global green bond edged back into euro. So we have edged everything back into euro and a euro aggregate as well. In terms of rating, again, very similar. A plus rating in average. You have A plus for the Euro ag. You have double A minus for the global ag. So something which is very similar. In terms of maturities, lastly, you're pretty close as well. That's something that changed versus the past, so pretty close, even if you still have a bit less on the very short part of the curve up to the 1-3 year. That in the past you had a different curve because the market was pretty new. Now that it is a more mature market, as you can see, you have bonds across the board, maybe a bit less just on the 1-3 year versus what you could get on the global ag and the Euro ag. But overall, when you compare everything, you have more or less the same type of modified duration, more or less the same yield, which is close in average, an average rating which is very close as well. Augusto, you have a question? Maybe I've seen a pop-up, but I'm not able to read it completely.
Yes, I was wondering in the prior page if you are finding any less number of issuances in 2025 compared to 2024, taking into account this U.S. Republicans anti-ESG movement.
So we have not seen any pushback on green bonds for the time being. As you can see, we're at more than 100 billion. It's something like 130 billion already, and you should multiply that by more or less a bit less than 4 to reach the total amount. Having said that, we don't expect much from out of the US. So that's something that is pretty clear. That's one of the differences I will mention a bit later on. When you invest into green bond versus a global ag, your universe is tilted towards euro versus a global ag. You have less USD denominated issuances. We were expecting between 2020 and 2024 the issuers to come on the USD denominated bond market for green bonds. It's not been that much the case, and I must say that now I expect that even less. So that's something where you have a difference on this part, and I can go, if you can go directly, I'm sorry, I will go back and forth on the slide. If you can go directly to the page 11, you will see the differences in terms of denomination by currency. So what you can see here is that definitely, the MSCI Bloomberg Green Bond Index is skewed towards euro denominated. It's 70%. So definitely much more than what you would get in a global ag, which is something like 28 something percent. And US would be definitely much smaller, something like 15% overall versus 35 in a global ag. So definitely, when you compare it to the global ag, there's a difference on two main. It's tilted towards euro. You have less USD denominated bonds, and one thing which is very different as well would be also the exposure to the Japanese yen denominated bonds, which is pretty high in terms of modified duration. What you have on the right hand side of the slide, where it's 0.82 in terms of contribution, whereas you have close to 0 in a green bond index. So that's where you would have the differences. And that's also why we compare the global green bond hedge backed into euro universe versus the global ag hedge backed into euro and versus the euro aggregate as well. Because definitely the universe is still tilted towards euro. If we go back, does that answer your question, Augusto?
Yes, thank you.
If we go back to the slide 8, in terms of sectors, so do we have more or less the same sectors? Well, in fact, in green bonds, you have less treasuries, but you have more agencies and government related as a whole. So here, you're just dropping some treasuries to buy some public related, government related entities. So I would tend to say that that's pretty similar when you look at this. If you aggregate treasuries plus government related, supranationals, etc., you will see that it's very close, one versus the other, when you look at the green bond index versus either the global ag or the euro ag. So on this, yes, you're switching treasuries out of treasuries into government related, but in terms of credit risk, you're very close one to the other. On the other part, there's one point where you will differ a bit, is that you're switching out of the MBS in the US into credit. So here we have two different animals, and you have very few green bonds for MBS. And that's something where you differ versus the global ag. That's not something that you have into a euro ag. And so in terms of euro ag, well, you will have a bit less covered bonds, a bit less treasuries, and a bit more financial institution into the green bond. So here, in terms of sectors, not that many differences. The main one being MBS in the global ag which is something that you would not have that much into the green bond. But otherwise, you will find financials, you will find industrials, utilities, gov-related treasuries. So everything else will be part of your universe in terms of green bonds, and that would be not that far from what you could get in a Euroag, maybe tilted to a bit more credit overall into the universe. If we go to the next slide, private rating. So here again, pretty similar, maybe a bit more triple Bs than the rest, but overall very similar in all cases. I mentioned it already. Rating is A+ in average, same than the Euroag, and it's AA- for the global ag. If you go to the next slide, you will see it on a country-by-country basis. I won't go through it. You can have a look at it if you receive the presentation or during the replay if you want to. But I think I should go more to the page 12, where we will talk about the growing investment universe. Because, in fact, at the beginning, green bonds were green bonds issued by either utilities for renewable energy, supranationals, then banks came in, funding the two other ones, then the real estate companies came in. And then only we have started to see some other industrial sectors. And that's what you get here in this slide. We've taken only the part of the green bond index, which is smaller than the overall universe. But what you can see here is that basic industry, consumer cyclical, technology, all this stuff were pretty tiny back in 2019. And what has been very interesting for this green bond universe is to see more and more issuers coming from the consumer cyclical, coming from the technology sectors, coming from the capital goods or the basic industry, coming into the market or transportation. And that's what you can see here with this graph, with this growing size of these issuers into the market universe for green bonds. And that helps to have this diversification, not only in terms of big sectors, as I mentioned, but also in the allocation to the smaller sectors like all the ones I've just mentioned. In terms of the evolution by currency, I already mentioned it, but that's what you can see here. You don't see the growth here that you would have expected to have in US at all. So that's something you've seen a bit in middle 2020, 22, etc. But it's not something that has a lasting effect, so it's tilted towards euro. The question now that we have talked about the overall universe and whether or not it fits and it compares to a classic universe, and you've seen it, it's not that far from that. The question is, does it give you the same return? So if we go to the next slide, there's something I'd like to tackle. We have a urban legend about greenium. So green bonds would be more expensive than standard bonds. In order to be as objective as I can be, I've taken a slide from Crédit Agricole. So not a slide we've calculated, not something that BNP Paribas Research done, something that Crédit Agricole did on the greenium that you have on the right-hand side. So the greenium, that's the difference in terms of yield between a green bond and the same bond from the same issuer with the same maturity which would be a standard bond. What you can see here is that first, it moves through time. And second, it rarely goes below 5. So you will rarely lose more than 5 basis points, so 0.05% of your return. And what you can see here is that it's even 1 basis point higher for green bonds than for standard bonds on the corporates. So that's the blue line on the right-hand side. What it says is that you should not care. In average, you should not care about greenium. Why? Because this picture is telling you that it has been between -5 to +1 for corporates, that for sovereign, it's been, -7, -7 to 0 or to 1. So when you look at the volatility during one day on the rates market, it can easily be 5 to 10 basis points. So it matters much more to know whether or not your asset manager bought the green bond at 9 a.m. versus 4 p.m. than knowing whether it was a green bond or not. Because the potential level of change in terms of yield is higher during the day on intraday volatility than the potential greenium you have in average on these bonds. So definitely, I would say don't listen to the urban legend on green bonds. There's no real greenium that is meaningful from an overall long-term performance perspective. If you go to the next slide, so we've said no real greenium. So if you have a portfolio with bonds with the same maturity, etc., you should have the same return. Question is, at the end of the day, you don't have exactly the same universe. So will you have the same performances? If you look on the right-hand side, I told you about modified duration. Here you can see it on the bottom right, where you see that the green bond index has seen its modified duration increase a lot, up to close to 9, ahead of the 2022 market, which was a nightmare for fixed income. So that has been detrimental to performances in 2022. The good thing for the for the green bond index is that now the modified duration is very close to the one of the Euro ag and the one of the global ag. So in the past it was different, but it's not the case anymore. And when you look at the yield as well, you see it's very close to the global ag and it's close to the Euro ag as well. Now, if you look at the bottom left on the performance comparison, you can see that performances were very close with the Euro ag and with the global ag until 2022, where you had this massive sell-off in fixed income at a time when the green bond universe had higher duration. So of course it's been detrimental to green bonds. But if you look at the performances since then, so since 2022, since especially the mid-23, where the modified duration has been very close versus the other indices, you see that the moves are highly correlated, that the volatility is more or less the same, and that the return is very close. Maybe if you go to the next page, I've done the focus on this specific period since end of 2022. When you look at this graph, you barely see three curves. You see a green-black curve and a gray one. The gray one is the global ag edged back into euro. The green is a green bond edged back into euro, and the black is a euro ag. If you barely see the black and the green line, that's because they have more or less the same performances. And so that's, I think, very interesting, because one of the arguments against having green bonds was to say, well, we may not have the same performances. Well, guess what? You're very close. So you're very close to the, you're so close that you can't see it versus the Euro ag. And at the same time, you only fund positive projects for the planet. So I think that's a very interesting study on this. This graphic is really telling on the return you can get on green bond fixed income versus what you would get on global ag. So it's a bit different. I mentioned the differences in terms of the universe, but still very close. You see the correlation. The curves are very in parallel mode most of the time. And versus Euro ag, again, since 2022, very tough to find a big difference. We end this graph at March 25, by the way. So that's really what I wanted to mention on the green bonds. In terms of universe, something which is very close to a Euro ag, something which is not that far from a global ag, even if it's tilted towards euro-denominated bonds. And in terms of return, something that has been very close since 2022, after a terrible year 2022, but still now very close to a Euro ag. The last point, maybe I'll open it for questions on green bonds, and the last point then would be just on whether or not it makes sense to invest in green bonds now.
Many thanks, Agno. I have a question, and thanks a lot, because it has been very interesting to hear you talking about all these characteristics of the green bonds. Actually, we hear usually to asset managers that some of the concerns were liquidity. Some of the concerns were that there was not enough availability of issuance in each of the parts of the yield curve. Also in terms of sector allocation and duration. And I'm finding out after your presentation that this is not really the case, or not really anymore, because many more issuers are coming to the market and now there is much more availability. For instance, do you consider it could be possible then to have, for instance, a target maturity portfolio for customers that could compete in yield, having just credit green bonds versus conventional bonds without giving up then much yields to be given to the clients?
Yeah, I definitely think it would be possible to have target maturity portfolios, except maybe on the very short part of the curve. So if you want to have a 2026, 27, 28, it might be a bit tougher because the universe is still a bit smaller, even within the green bonds. The percentage, as I pointed out a bit earlier, on the 1-3 year maturities is still smaller, and then you would face maybe more issues in terms of liquidity for something that would be less than 3 years, because you don't have that many issuances of less than 3 year bonds in the market. So you would have only to rely on the bonds which have been already issued. And that means that you would have less offer overall on this part. That would be the case, by the way, as well on the standard bonds, but that would be more significant as an issue for the green bonds. If you go beyond these maturities, yes, you could have some maturity portfolio for green bonds. And in terms of curves, you were mentioning the lack of curve. When you look at Germany, you can have 2025 and 2 year and 5 year and 10 year and 30 year on the Bund. So they've done a whole curve. That's not the case of all the states, but Germany, for instance, they have the whole curve now in terms of green bonds. So yes, now you can build a portfolio on the whole curve. If you want to have a 3 billion on a 2027 maturity, that will be tougher. I would not advise to do so. But if you go beyond, and if you have some, I don't know, 500 million, and if you want to go to longer maturities, at least beyond 3 years, that would then be a reasonable go to look at it.
Thank you.
Maybe otherwise, I don't know if you have any other questions. Otherwise, just whether or not it's a good timing to enter into green bonds. I see a question from Christian Torres. Maybe if you can read the question for me, Augusto, because I've just
from of the slides, looks like issuer do not benefit from issuing a lower cost funding. Actually, the contrary. Year 2 maturity 3.14 versus 3%, or OAS 65 versus 55 in green. And
okay,
BL Euro aggregate to name some points. Thanks in advance, Christian from Solventis.
Okay, so for this question, so when you look at this, so that was slide 7. If you can go back to the slide 7, when you compare the yield to maturity on these slides, be mindful of the fact that you have different issuers or different breakdowns overall. So you have a bit more credit, as I mentioned, in a global green versus a Eurag. So it's normal to have a higher yield in this case. Having said that, you were mentioning whether or not it's interesting, and if we go back to page 14, for an issuer to issue. So I had a very interesting debate with a bank treasurer. I was arguing that there was no green yield. He was arguing that it was great because he was able to issue a green bond at a lower yield than the standard bond. So it was a nice fight on the round table, a nice argument that we had. But at the end, what the bank treasurer said was that he was able to issue a lower T2 that was 5 basis points lower than what he would have expected in terms of yield to issue for standard bonds. But that was still providing a new issue premium. So the new issue premium is the difference between the yield that you will get on a primary market versus the yield that you would get on secondary market. That's what you have most of the time on the primary market, in order to incentivize the portfolio managers, the investors, to buy the new bond versus the existing one. Most of the time, you will get some basis points of pickup in terms of yield. And the argument of this bank treasurer was that, yes, he paid a higher yield than what was in the secondary market, but he thought that when he calculated, it was the lower yield than what he would have got from a standard bond, and it was something like 3 to 5 basis points lower. On my side, 3 to 5 basis points lower, I don't care. As I mentioned, it's less than the volatility on an intraday basis. And second point, so the issuer is happy because he gets a bit lower versus what he was expected. And the investor is happy because versus secondary, he still gets a bit more. And versus what he would have got potentially on a standard bond, it's nothing versus the volatility on the intraday. So that's a bit where you could see this from this perspective. So there's the answer from Christian, I guess.
Yeah, Christian says, but that's the exception, not the norm, according to your numbers. And yet it's not exactly comparable, but close enough.
Yeah. No, but at the end of the day, yeah, the point is no difference in terms of yield from a green bond perspective versus a standard bond. Absolutely. Maybe just last point, if you're interested into it, whether or not it's the right timing to go into fixed income, I will do it very quickly. The first one, I would just go to the page 21, in fact, 20. Let's say go to 20. Just to say that we have positive interest rates. I still mention that because I'm still, scared about the period we had as a fixed income investors of negative rates years ago. So we have positive rates. There was something missing from a fixed income perspective. That was a positive curve, a positive slope of the curve. And so that's what we have now. We're very close to the historical slope on the 210. So when we look at the 10-year rate from Germany minus the 2-year rate, we're around the 80 basis point. The long-term average has been closer to 100 basis points, but we come from an area where we are the negative slope. So I think that from a fixed income perspective, you have interest rates which are attractive, and in addition, now you have a normalized curve. So it's the right timing to enter into fixed income, and if it's the right timing to enter into fixed income, it's the right timing to enter into green bonds from my point of view, given that you've seen that the universe are close one versus the other, and in terms of preferences, we see a lot of similarities in the recent past. So something that is very important, and you can see it on the curve, page 21 as well. So Germany, you widen back, but it's even more important if you look at France, if you look at the Italian slope as well. That would be also the case for the Spanish slope, which is pretty steep from our point of view. So that's something which is very important from a broad market perspective. When you go where you go beyond all the turmoil we've seen recently, and take a 40,000 foot view, very important to have both these attractive rates and the normalize of the curve which has been done. In addition to that, you should expect, I think, the ECB to cut more in the coming months, so the better timing for the entry point right now.
No, I have some more questions.
Yeah.
One is regarding the impact or the use of proceeds or the information actually we can provide to our customers and clients when they invest in green bonds. Can you give me some examples of impacts that these bonds are giving? And also, are you finding that the information that it is provided by the issuers is correct? And in all the different geographies, we are finding out, for instance, that in Latin America, there are some providers that are not having proper information about the use of proceeds from some of the issuers. I don't know if in other emerging markets in Asia this also happens or not. What can be done in order to have all the information regarding the impact and the characteristics of those green bonds?
So first, well, the asset manager has to do her homework. So looking at the investor report, making sure that you have an auditor checking the coherence of the data versus the project, and you can also try to check what the issuers on your side. You can also try to check what the issuer is providing to you and whether or not it makes sense. On our side, for instance, we have a supplier who will recalculate the avoided emissions, which are claimed by the issuers. We will have a provider who will recalculate that, and we can challenge the issuer when we see a material difference. We do hope still that the issuer knows better than our provider, but at least we'll be able to challenge the issuer when we see a material difference between what is claimed by the issuer in its impact report and what we have through the recalculation from our external supplier. So that's a way to check the impact and whether or not it makes sense. It's in line with the type of project, with the way electricity is produced in that country, etc. In terms of impact, you will be able to fund green buildings. You will be able to fund renewable energy. So on our side, we do provide at the end of the day for our funds an impact report that will tell you, well, for this fund, which is a 1.4 billion fund, you've been able to fund the electricity for 100,000 standard households in Europe, for instance, or you've been able to fund this amount of this amount of kilometers on clean transportation for passengers, or this amount of energy which has been saved, or these surfaces, these areas for green buildings which has been built. So all this would be some output measures or some impact measures that you would get thanks to the collection and the aggregation of the different impact reports. Okay, there was another question. I've seen a pop-up. I'm sorry, I can't read this pop-up too quickly.
Yes, Christian says, going forward, any discussion in Europe for new standardization rules for classification of green bonds, benchmarks, modifications, ETF providers, etc.? Thanks in advance and great presentation data. No.
Okay, so yes, that's a very good question because we do have now a new standard in Europe with the European Union Green Bond Standard, which has been set up by the European Union. So first, European Union set up the EU taxonomy. When they give you for each type of activity, or most of them, there are still some which are missing, but for renewable energy, for hydrogen, they will tell you what is called a really green hydrogen. So you know that you should not spend more than this amount of CO2 per unit of hydrogen produced. Otherwise, it cannot be called green hydrogen. And you would have all these criteria for all the type of technologies that can be eligible to the EU taxonomy as defined by the EU Commission. And you have also all the criteria on the do no significant harm, which are prepared by the EU. So you already have this standardization on the EU taxonomy. In addition to that, we now have the EU Green Bond Standards, and we will have the first EU Green Bond Standards quickly. Well, we already have some, but not that many, where the European Commission has set up a standard based on the EU taxonomy, where you can claim that your European Union Green Bond Standard, European Green Bonds certified, let's say. So that's the standardization as well, which has been already made. It's up and running, it's done. The next step on standardization, and it goes back to your question, Augusto, on reporting and impact, is on impact reports. So that's where we need more standardization going forward. That's where we need the European Union potentially, and even broader than that, to come to a classic standard agreement on what should be into an impact report and what type of methodologies might be used. On that, we have some of my colleagues who are part of the ICMA working group on the reporting on this part, and that's something that is progressing, but not yet fully done. But that's definitely where we should aim to go. Any other questions?
I will have just the last question, Agno. Are you noticing any geographic shift in green bonds issuance? Are you seeing, for instance, more issuers from emerging markets. How are you seeing Asian and Latin countries in green bonds or sustainable bonds or blue bonds or this kind of use of proceed bonds?
Well, first for blue bonds, we would love to see more of them, but it's really, really tiny for the time being. It's very tough to find blue bonds on the market. It's very tough, by the way, for the issuers to issue blue bonds, etc. But that would be great to have more blue bonds. In terms of shift, in terms of geography, yes, we've seen more and more issuers out of Asia. So that's definitely where we've seen more issuances. In terms of LATAM, it's not new. We've seen issuers out of LATAM we have seen out of LATAM a lot of issuers for many years now. So it's not completely new. In Asia, it's not new, but it has grown substantially. I would tend to say last year and the year before, especially. So that's where you've seen clearly some progress. It's a bit less the case this year. But it was definitely the case last year and the year before. With 3 years in a row, we had a strong supply from Asia. South America remained smaller overall.
Great, Agno. I think there are no further questions. I would like to thank you again for your participation in this webinar. As we mentioned at the beginning, this webinar is going to be also published in the CFA Spain webpage, so it is going to be available for all the CFA Spain Society members. Thank you very much. It's really a pleasure to count on you for this webinar, and thanks BNP Paribas for this opportunity.
Thank you, Augusto. Thank you, everyone.
Okay, bye.